Hey everyone, welcome back to the channel. Today, we diving deep into an ETF that could be a cornerstone for your international stock exposure. The Schwab International Equity ETF, ticker symbol SCHF. If you've been thinking about diversifying beyond US markets, you're in the right place. We'll break down what SCHF is, what it holds, its performance, and why now might be a particularly interesting time to consider international stocks, especially with the whole debasement trade narrative gaining steam. So, what exactly is SCHF? It is an exchange-traded fund from Charles Schwab that aims to track the performance of the FTSE, Developed ex-US Index. In simple terms, it gives you broad exposure to large and mid-cap stocks from developed countries outside of the United States. Think of it as a one-stop shop for investing in companies from Japan, the United Kingdom, France, Canada, Australia, Switzerland, and many more. As of now, it holds over 1,500 individual stocks, making it incredibly diversified. Why should you even care about international stocks? Well, for starters, diversification is key. The U.S. stock market has had an incredible run, but history shows that market leadership rotates. There are long periods where international stocks outperform U.S. stocks. By only investing domestically, you could be missing out on major growth opportunities elsewhere in the world. Plus, it reduces your portfolio's overall risk. If the U.S. economy hits a rough patch, having exposure to other healthy economies can cushion the blow. Different countries have different economic cycles, and owning a piece of global business helps smooth out your returns over the long term. Let's look under the hood of SCHF. Its top holdings include some massive global names you probably recognize, like Nestle, Novo Nordisk, ASML, Shell, and Toyota. Sector-wise, it's heavily weighted towards financials, industrials, and consumer discretionary. Geographically, Japan makes up the largest slice of the pie, followed by the UK, France, and Canada. This wide distribution prevents you from being too concentrated in any single country's economic fate. One of the biggest selling points for SCHF is its incredibly low expense ratio. At just 0.06%, it's one of the cheapest ways to get this kind of international exposure. Over time, those low fees can make a huge difference in your total returns. Now, let's talk about performance. Historically, SCHF has delivered solid, if not spectacular, returns that closely mirror its underlying index. It's not designed to be a high-flying growth fund. It's designed to give you stable market-rate returns from developed international markets. Over the last decade, it has lagged the S&P 500. But as we said, leadership cycles change. This brings us to a really important and timely topic, the debasement trade and the US dollar. For years, the US dollar has been incredibly strong. This makes foreign goods cheaper for Americans, but makes US exports more expensive for the rest of the world. A strong dollar also hurts the returns of US investors holding international stocks. When you convert profits from euros or yen back into a strong dollar, those profits are worth less. However, there's a growing belief that this trend might be reversing. With massive U.S. government spending and debt, some investors are concerned about the long-term value of the dollar. This is the idea of currency debasement. If the dollar starts to weaken, it creates a tailwind for international investments. Suddenly, those profits earned in foreign currencies translate back into more U.S. dollars. This debasement trade is essentially a bet that a weaker dollar will boost returns for non-U.S. assets. Investing in something like SCHF is a direct way to position your portfolio for this potential shift. If the dollar weakens, the value of SCHF's holdings in their local currencies will translate into higher U.S. dollar returns for you. So to sum it all up, the Schwab International Equity ETF, SCHF, is a fantastic low-cost and highly diversified tool for adding international stocks to your portfolio. It offers exposure to thousands of companies across the developed world, helping you reduce risk and tap into global growth. And right now, with the potential for a weakening US dollar, the timing could be very compelling. A fund like SCHF could benefit significantly from a reversal in the dollar's long-term strength. As always, do your own research to see if it fits your personal investment strategy. Thanks for watching, everyone. If you found this helpful, please hit that like button and consider subscribing for more content. Let me know in the comments what you think about international investing. See you in the next video.